the fiat money system and say it's failing, and so it kind of looks like the Titanic, and we know the Titanic, at one end tipped up and then eventually it sank and it was dead. I think before the end of this year, Bitcoin will be 140,000 a coin, in my opinion, as the next leg up develops. And it could be even higher than that, depending upon what they do in terms of the big print and money printing. I think on a longer term basis, the next 4 years of Trump will have slowing growth, troubled bond market, printing money, more inflation, and both gold and Bitcoin will go up, Bitcoin more substantially than gold.
Lepard delivers a chilling warning using a powerful analogy. The Fiat monetary system is the Titanic and the iceberg. It's already been hit. We just haven't felt the full impact yet. In this scenario, gold and Bitcoin are your lifeboats. Yes, they were cheaper years ago, but the price you paid then doesn't matter now. What matters is this: do you have a seat before the ship goes down? This isn't fear, it's foresight, and the window to act is closing. If that hits home, take a second to like this video, subscribe to the channel, and turn on notifications so you're never caught off guard in this fast-changing financial world. Now we want to hear from you. Are you already in a lifeboat or still trusting the Titanic? Drop your thoughts, strategies, or questions in the comments. Let's get real about what's coming. Your engagement fuels this community and helps us reach more people who need to hear the message. Thanks for watching and stay sharp.
The monetary system is broken. And it's broken because, Keynesians convinced us we need inflation, and inflation is a progressive disease that gets worse and worse. It's like drinking, eventually you die from an overdose or, drinking too much. And same is true with inflation. And so we've got to stop this inflationism if we ever want to return to a normal system. I don't think there's any doubt. I mean, just like somebody who's a drunk, you go through the delirium terms when you quit cold turkey. I mean, stopping this is going to be painful, but honestly, it's painful right now. And the thing that I always say when I talk to people about this is, wouldn't you rather have a one-time extremely painful event and then know that after that event is over, you'll not experience that anymore because the problem will be solved? And that I think helps people to get through okay, we've got to endure the wrenching change that this might result, the ripping of the Band-Aid, which does hurt. But once it's off, it's off. And once we're back on a sound money standard, things will get better very quickly, very, very quickly, in my opinion. So total available assets, financial assets in the world at $900 trillion now. So this is all stocks, all bonds, all real estate, all cash worldwide is $900 trillion. Total market cap today of Bitcoin is $2 trillion. So we are 2/900ths of all the assets out there. That's 0.2%. That's pretty small for something that's a better form of money than anything we've ever seen before. So, Bitcoin could go from 100,000 to 1 million, which would be 10x, and it would still only be 2% of all the assets. I mean, cash is like 18% of all the assets. So now, am I saying we're going to take over all the assets? I don't know. I mean, we got to see how this all shakes out. But my point is, for those who think they're too late, they're very much wrong, in my view, just because of the total available market that we can try and capture and the fact that we're still very early days in terms of adoption. The other thing I like to use the, I can't pay this, you got it cheaper thing. I try and make the metaphor of, let's examine the fiat money system and say it's failing, and so it kind of looks like the Titanic, and we know the Titanic, at one end tipped up and then eventually it sank and it was dead. And the fiat money system has some characteristics like that. I'm not sure that's what's going to happen. We might save it before it sinks, but it has characteristics like that. Okay, so lifeboats, if you're on the Titanic, you got a seat on the lifeboat. Well, that's good. You're not going to go down with a ship. And in the olden days, you could buy a gold lifeboat for $300 an ounce, or, in the 2015, you could buy it for $1,000 an ounce. And now if you want to buy a gold seat, lifeboat seat, you got to pay $3,400 or $3,500 an ounce. Okay, fine. In the old days, Bitcoin, you could buy $100, $1, $100, $1,000, $10,000, $20,000. Well, now you got to pay 85. But frame it in terms of, you're on the Titanic. Do you want the lifeboat seat or not? Yeah, some other people bought those seats cheaper than you did. That's gone. You can't do that anymore. They were the early adopters and they get rewarded for being early adopters. But you can still buy it today, and someday everyone's going to want to buy it, and it's not going to be at 85. It's going to be at 8 million. So, that's those are two ways I try to frame that. And it's very hard for people. I mean, I know a lot of people look at a financial asset and they say, well, it's going up. And once it goes up a bit, I'm going to take my profit and get out of it. And I say, well, fine, but what for? Where else are you going to go? Because, it says, Michael Saylor says, it's going up forever, Laura. I mean, it's something that has never existed before. A commodity, the supply cannot be expanded. I mean, price of gold goes up, we make more gold. Price of oil goes up, we'll drill for more oil. Price of anything goes up. Corn goes up, we'll plant more corn. Price of Bitcoin goes up, doesn't matter, same amount. And so that thing, I mean, the fact that we have a financial asset with that characteristic, that's just different. It's literally, we've never had that before, which is why I often say, I think when the history is written of this time, we'll look at it and we'll say, there's before Bitcoin and after Bitcoin, in the financial markets. Because after Bitcoin, we had, natural scarcity. I mean, just true, immutable scarcity. And that should continue to go up forever. And so, if you want to be a part of that, you've got to own some. I think before the end of this year, Bitcoin will be 140,000 a coin, in my opinion, as the next leg up develops. And it could be even higher than that, depending upon what they do in terms of the big print and money printing. I think on a longer term basis, the next 4 years of Trump will have slowing growth, troubled bond market, printing money, more inflation, and both gold and Bitcoin will go up, Bitcoin more substantially than gold. I think at the end of that 4-year period, the country will be very frustrated, mad, angry, suffering from inflation, economic downturn, and not that the other side's any better, because I don't really think they are, but they'll vote the bums out, and they'll vote for the Democrats who will promise UBI and stimmy checks and big budget deficits, and we can spend our way out of this problem, which we can't. And so they'll get in there, maybe high taxes on certain individuals, and so they'll get in there and make things even worse, and then we'll get really high inflation. Like 20-30% a year. I mean, kind of monetary failure, sort of the inflation. The thing that started to happen in Weimar, and then I think either that'll go to its natural conclusion, which is the dollar becomes worthless, or I think more likely, and part of the reason I wrote the book was, people will realize what's happening. They'll realize it's the money printer. They'll realize it's the Fed, and some politician will stand up in that cycle and say, "This is the problem, folks. We need to fix it," and they will win overwhelmingly. And we will do a currency reset, where we're now on the Bitcoin standard. I mean, that's kind of the best hoped for solution, and that's kind of how I see it unfolding.
But a reset won't come without casualties.
Lepard sounds the alarm. Long-term bond holders are sitting ducks as inflation accelerates. Their purchasing power is being quietly destroyed. Retirees living off fixed income pensions, annuities, or Social Security will watch their monthly checks stretch less and less. And the worst part, according to Lepard, this pain is inevitable. The government has made massive financial promises it simply can't keep not. Without choosing between two disastrous options: default, triggering a catastrophic depression rivaling 1929, or inflate the debt away, stealthily robbing people through currency debasement. Lepard believes inflation is the path they'll choose. It's politically easier, especially if packaged with a grand narrative, a transition to sound money, a gold or Bitcoin-backed currency system. Once trust in money is restored, the economy, he argues, could reboot quickly and powerfully. But until then, the middle class may continue to bear the brunt. Let's go back to the interview.
If Trump's term runs to 2028, so that means kind of sometime before 2032, Fiat has failed, and we've got we're on a hard money standard again. I mean, that's kind of my midline base case. It could take longer, it could happen sooner, but that's kind of my midline base case for what we're talking about here. And in that case, by the way, I mean, gold's going to be over 10,000, maybe 15 or 20, and Bitcoin's going to be 500,000 to 1 million to 1.5 million. I mean, it's going to be so much higher, and that's all just a function of really the loss of confidence in the government. I mean, some people say, well, if we could get the government to balance the budget, great, but and that's somewhat true, but getting that to happen is just a really tall order and very hard to do when 80% of the spending is locked into interest, defense and boomer entitlements, and the boomers are still a big enough voting bloc that you can't cut those entitlements. So, it's kind of baked in the cake, frankly, that they're going to continue to print money, and that's going to lead to continued inflation getting worse. And then, what I hope for is we get politicians who see that that's really the issue, and they fix it. what's really wrong here is the currency is broken. And if we fix the currency, the system it'll self-correct. I mean, it'll self-heal. Now, don't get me wrong, between here and it being fixed, there will be big time winners and losers. I mean, because how do you get from here to there? There's going to be a lot of inflation. A lot of inflation. That's what the book talks about. And so those people, first of all, if you own a long-term bond, your purchasing power is just going to get, really whacked hard. And if you have a fixed money pension, like Social Security or whatever it might be, the government will still keep paying it to you, but what it buys, you're going to be pretty shocked at how bad how bad the money is depreciated in value. It's not going to buy as much. But this is actually a necessity because we've created more obligations than we can fulfill with the existing money supply and the existing GDP. And so we have to inflate. We either have to repudiate the debt, which says, just cancel it, or, default on it, which would be kind of unthinkable and would lead to kind of a 1929 depression type situation, or we need to print enough money to make the underlying GDP closer to the size of the debt, which would be highly inflationary. But if we said we're going to print this money and do this, and then as we do it, we're going to reset to a new higher level for gold or Bitcoin, and they are going to become the reserve currency, the inflation would stop. It would stop. And so I think people would be willing to live with knowing that there's a better time ahead. They might be willing to live with a tough transition. That's kind of how I see it. But don't get me wrong, I may have it wrong. And when I say it's going to be tough, it could be orders of magnitude tougher than I think. But frankly, continuing along in the system we have, that's pretty tough too. I mean, I think the country is hurting right now because of the COVID inflation. Wait till the next one comes. I mean, I entitled the book The Big Print because I think we've got another one coming because of the Stein's Law and a lot of other things I can explain in a minute. But, to be complete disclosure, we've had two big prints. We had one in '08, with the QE that they did there and the 0% interest rates they did there. And we had another one in 2020.
Lawrence Lepard doesn't sugarcoat it. The road ahead won't be easy, but it's necessary. He's clear-eyed about the pain that comes with transitioning away from a broken fiat system. But in his view, there's no other option. The current monetary model is unsustainable. The only real solution: a return to hard, immutable money. To Lepard, Bitcoin isn't a speculative asset or the latest tech trend. It's the foundation of a new, more honest financial system, one built on scarcity, transparency, and decentralization. In plain terms, adopt sound money or suffer the fallout of endless debasement. It's not just a financial choice, it's a turning point for our future. Like this video, subscribe and turn on notifications. And join the conversation. Is Bitcoin our only escape from fiat decay, or is there another path? Drop your thoughts in the comments, we read everyone. Want more? Watch more videos on our channel for bold insights, deep dives, and real talk on Bitcoin, sound money, and the future of finance. Let's build a smarter, freer financial future together. See you on next video.